We score very, very highly on the EU Taxonomy Sustainable Index. And by the way, here's an LSE green mark.
All of that is, by comparison, window dressing compared to what have you got in the ground. At the moment, I haven't seen too much conversation about that. I've seen lots of market conversation. I've seen lots of, chat about everything else but what's under the ground. So what have you got? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. That helps us to understand which companies you think we should be spending our time and money on for you. You can also leave your comments below. Helps us understand the types of questions you think we should be asking, how you think we've done, and of course what you think of the company. You can also get this as a transcription, article, or podcast on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this video. And obviously, don't forget to click the button in the corner of the screen to subscribe to the YouTube channel. And also, if you want to watch videos like this, click the notification bell. We spoke earlier today to Paul Atherley from Pensana Rare Earths. They're listed on the LSE main board now. Rare Earths company with project in Angola. We talked to Paul about the plan to move things forward. Obviously, still a relatively small company. Shares have done quite well recently. And we talked to him about the sovereign wealth funding from Angola, their new Chinese partner, and therefore access to sovereign funds from China, and the cost of that. Obviously very, very appealing. We give them a little bit of a hard time talking through all of those moving parts because rare earths is little understood by the main market. We discuss some of the reasons why. Paul comes straight back at us, which we appreciate. So take a look at the description below at some of the topics we cover. Anything interests you in particular, click the number. That's called a timestamp, and that'll jump you to that part of the interview. Otherwise, enjoy what Paul has to say. Paul Atherley, how are you doing, sir?
Very good, Matt. How are you?
Not bad, not bad. I'm holed up. I've got a bit of a back pain from too much exercise because I was bored.
I don't have any back pain. I'm worried about how you got your back pain in the lockdown, but we won't go there. I'm extremely well. I've managed to hit a few tennis balls in this nice weather.
Oh, very good.
And but very busy.
Good lad. Good. Swimming is the answer, by the way. So, now we've established that. Why don't you kick off? Give us that 1 minute overview of the business, and then we'll pick it up from there.
Pensana Rare Earths recently listed on the main board of the London Stock Exchange. We are looking to develop the first major rare earth mine in over a decade. And this is the time when the metals that will be the supply chain for are in increasing demand. This is the metals for magnets in electric vehicles and for wind turbines, particularly offshore wind turbines. So we think we're bringing on a really important mine, first one in 12 years, just as this massive demand is kicking in.
Okay, fantastic. Okay, rare earths. We spoke to a few companies recently, different types of rare earths, obviously. Now, you have made a big story over the fact that China controls 87% of the production of neodymium, praseodymium. You're in Angola. There's an opportunity to break free, and then you go and get a Chinese partner. Talk me through it.
Yes, that's right. Well, we were never looking to break free. A number of reasons. One is China's put $20 billion into Angola and built the infrastructure. So they built this Benguela railway line at $2 billion and the port of Lobito, which means our capital cost is very low. We've got a capital cost of $200 million for our mine rather than $400 or $500 million. So that's the first thing. We've benefited from Chinese infrastructure spend. But more fundamentally than that, the only processing capacity for a rare earths outside Lynas Corporation in Malaysia is actually in China. So it doesn't matter where you mine your rare earths, they're going to go to China. And China produces, as you've mentioned, nearly 90% of the world's magnets. So if you're an auto manufacturer or a offshore wind turbine manufacturer, you're going to get your magnets from China. So we're just part of the supply chain, and part of that supply chain is processing capacity, magnet production in China.
True, but there are European ecosystems, American ecosystems being built today, which will need some of these rare earths, especially around the battery component. You took this EV revolution. Well, everyone's talking about this EV revolution. Did you have conversations with any Europeans or Americans, or was it just so much easier to take cheap Chinese money, or at least have the option of taking cheap Chinese money?
We're not exclusive to China. We think our dominant market will be China because of that. But we are also been talking to the Japanese, the Koreans, and the Germans. There is no processing capacity of any size in outside Europe or Japan or Korea or China. There is plans for processing capacity in the United States, and we would supply to that when that emerges. So even though we are, as you say, likely to be Chinese funded, that doesn't make us totally wedded to China. It just happens to be that's where the market is today.
It is, and I think there's a competitive tension which needs to be explored, and I'm sure you will, because I thought it was interesting that although you have got an EPCF, as you call it, with a Chinese group to give you the optionality to go and talk to Chinese banks, you are not exclusive, you've said. So explain the relationship with your new Chinese partner.
It's a really good question, because normally there's this association with an EPC F, that's a funding and engineering. Normally everybody says that comes with offtake. In other words, you get the money and the financing in exchange for the offtake. This is not the case in this circumstance. Well, the main reason why China Great Wall Industries Corporation has come to us is because they are one of the major Chinese contractors in Angola, spending that $20 billion. They've been involved 3 major projects in Angola, and they basically come to us and say, look, we're a Chinese contractor in Angola. This is our business. Can we build you a mine for you? And we've said, yes, we'll bring the specialist processing engineering capacity to you. That's the Wood Group in Perth in Western Australia. And we're about to make an announcement regarding some accelerated project management. So basically, we brought the process engineering to them. They bring Chinese engineering in Angola, existing infrastructure, and Chinese SOE financing, which is obviously a completely different tenor to the kind of financing a junior company that you're very familiar with would have think about how it would fund a mine of this kind. So 2 big wins. One, existing Chinese contractor in Angola, which deals with all the Angola issues. And then secondly is we're looking at SOE style financing for our mine.
From China?
From China.
So when you say it's not necessarily exclusive, what did you mean by that?
I mean that we've not announced any offtake arrangements yet. We don't have any offtake arrangements. So the announcement we made the other day said that we've entered into a heads of agreement with China Great Wall. They will look at doing an EPC and F, that is, they'll do the engineering, procurement, construction, and with others do the management. And alongside that, they will help us procure the finance. And we've indicated in the announcement the finance will be commercial banks in China plus Sinosure. And Sinosure is China's export finance guarantee agency, a bit like our UK export finance, and the Austrians, the Germans, the Japanese all have the same thing. So we're bringing all that together. It's all at the heads of agreement stage, and then we'll hopefully over the next 6 months bring that together and finalize it into a complete engineering financing package.
Should the rest of the market be nervous? Because the amount of times I've heard CEOs, companies, even countries, presidents and otherwise, say to me, we don't want Chinese money. They've got too much control in China. And then they take Chinese money because it's the cheapest, quickest route to getting what they want.
Well, I don't know about these other CEOs because I hear what they say to us. I lived and worked in China for 10 years. I was chairman of the British Chamber of Commerce there. I was vice chairman of the China-Britain Business Council. And as far as I'm concerned, China is part of the global supply chain for many of these goods that we use. I'm sure your Porsche parked in a garage out there, if you look through that, even the German car is full of Chinese manufactured items. So we're part of a global supply chain. So this sort of Trumpian rhetoric, which suddenly we're going to create a trade war between the biggest, fastest emerging major economy, we're suddenly going to shut ourselves off and we're all going to, I don't know, build our own iPhones or something. I think it's nonsense. And I think, if you want to talk to China more generally, I think the best way to deal with China is to engage fully with China at all levels. And if we don't like what's going on in Xinjiang, which we shouldn't, we should, as partners, say to them, we want to do business with you. We want to be you to be part of the global economy, but we're also going to challenge you on human rights and other matters. And I think you can be a lot more effective if you engage with China than if you retreat behind some form of nominal trade wall, or get out a megaphone and start shouting at each other.
Okay. The Angolan Sovereign Wealth Fund has also invested in you recently. Is this a standard issue from them? Is it any large or potentially large business they put money into, or what are they hoping to get out of it?
I think you're being slightly ungenerous, Matt. I think you've sat in front of so many junior companies who've failed to get funding, and here I'm delivering to you sovereign wealth funding. I'm not even at BFS stage yet, and the Chinese SOE funding. So yes, we think we've done a really good job. The Angolan Sovereign Wealth Fund has done what it says on the tin. It's a sovereign wealth fund, and it's investing in a company that's following government policy. So the government policy in Angola, this new young government, is doing everything right, trying to attract foreign investment. It's diversifying away from oil and gas and diamonds into mining, tourism, and agriculture. We're the first cab off the rank of the major mining project, and they've backed their own policy by taking their sovereign wealth fund and put 2 equity tranches into the company so to accelerate the project. So I think the sovereign wealth fund is doing exactly what it should be doing. It's investing in Angola in line with government policy, which is in line with the aspirations of the democratically elected government that is meeting the fundamental aspirations of this amazing young population. The average age of the Angolan population is 17 years old. They're bright, well-educated, aspirational, the same as anybody else. They want jobs. They want training and jobs. So the Sovereign Wealth Fund investing in us, and we are investing in Angola, is meeting the aspirations of those young Angolans.
Okay, and do you think that future institutional investors would have a problem with this Angolan Sovereign Wealth Fund being invested? Because there are some sort of legacy issues around the Dos Santos family and how certain projects have been run. Or do you think that has been cleaned up now?
Almost absolutely cleaned up. I mean, there's huge credit to the fund. It's clearly dropped all the historical relationships. And I can tell you that in London, I forget which authority it is, but part of the City of London regulatory authority, they've actually returned funds to Angola, which we shouldn't have been in London, and gone back to the government and the Sovereign Wealth Fund. So very much a case of, and there's been very good work done by Baroness Northover from UK Export Finance, Minister for Africa, Minister for Trade. The UK government's focusing on Angola as one of the favoured destinations in Africa. And part of this is to remove controls over investment into getting money in and out of the country. And part of that is this transparency on how Angolan institutions conduct their business. And I have to say, every dealing we've had with the Angolan government, both the Sovereign Wealth Fund and all the regulatory departments, has been completely transparent and very, very high quality. So we're very, very impressed. And I have on my team, we've recently closed our office in Australia, and we're moving everything now to Africa, and we've got young talented African management team, and they get quite angry when they see it as a form of arrogance when they get lectured from London and places on Dos Santos regime or the history of Angola. They say, hey, give this new government a break. They got elected in 2017. The first things they did was arrest people from the previous regime, put them on charges of corruption. They've chased the money down, brought it back, and they've been delivering on everything they've said to this young electorate. So the request from Angola is, give us a break. Just have a look at what we're doing and judge us on what we do, not what happened in the previous regime.
Okay, and the reason I ask is because you're talking about a product which is feeding into part of this ESG revolution, okay? And all parts of the food chain need to be clean, and that's a very important point for you to make about what you may be hauled over the coals for in the future. So you're saying it has been addressed. Give the government a chance to rectify if there's anything outstanding. But as far as you're concerned, there's nothing to discourage large funds to invest in you at some point in the future.
One of the first institutional investors to invest in our company was actually Fidelity, and that was one of the things we had to do. We had to provide them with an ESG report, top to bottom, about everything we're doing on a project level and a company level. So yes, we've already addressed that. But the ESG stuff is, there's a lot of companies talk about it, and it's essentially a sort of light greenwash. We've got ESG to our core, right down to training young female Angolans into STEM, right the way through to greenhouse gas emissions with Scope 1, Scope 2, and Scope 3 compliant. We're working our way all the way through. We're about to make a director appointment to cover that area, where we've actually employed somebody whose sole job will be to drive ESG. So yes, you'll see on every single mining company presentation, Matt, there'll be a slide on ESG. I think the difference is who's actually walking the walk rather than talking the talk.
Well, it's true, but it's more important for companies in your space more than ever. I mean, most mining companies, they say, have a page on it and they tip their hat towards it, and they fund schools, drill water wells, or whatever it is that they do. But your whole entire food chain must deliver, for sure. And look, and we'll get into that, of course. Can you just talk to me a little bit about the move to go to the LSE main market? What was that? Why did you do that?
It's primarily to target the ESG funds. There's $47 trillion gone into those ESG funds, and we've looked very hard at the EU taxonomy on sustainable investment. And our view is it won't be just ESG funds that have to follow that taxonomy. It'll be a bit like a MiFID II. Every fund will have to follow it. So we're now gearing ourselves up to meet the sustainability index requirements for the EU taxonomy, so that we are an acceptable investment, a target investment for ESG and the generalist funds who have to go down that track. And one of the areas we're doing that is through third-party validation. So we've started the process of applying for the LSE's green mark. I think you're familiar with, there are certain companies listed on the London Stock Exchange that meet this. Well, we think it's one of the advantages of the EU taxonomy is they recognize that mining is essential for the green energy transition. Energy transition is very metal intensive. There's a series of critical metals, not least of which the magnet metals. But they recognize also for metal mining, not fossil fuel mining, metal mining, this can actually be very, very low carbon intensity. So in actual fact, mining scores quite highly in the sustainability index under the EU taxonomy. So we're going to those ESG funds and saying, look, you want leverage to electric vehicles or offshore wind turbines, we've got the metal that supplies them. And by the way, we score very, very highly on the EU taxonomy sustainable index. And by the way, here's an LSE green mark, etc. So that's our reason for coming to London, is to present ourselves to that audience.
Okay, but I want to kind of get to the meat of this. Okay, all of that is, by comparison, window dressing compared to what have you got in the ground. And because even with your EPC partner, they don't really care about what's in the ground. They just want to be paid for building the plant, right? I want you to show me what you know about what you've got in the ground, and what you think that's going to, excite the market. Why that's going to excite the market? Because at the moment, I haven't seen too much conversation about that. I've seen lots of market conversation. I've seen lots of, chat about everything else but what's under the ground. So, what have you got?
Well, we've got a very, very large deposit, and it's sitting on the surface, and it's right next door to some amazing infrastructure. So that's our point of differentiation. The drill program is complete. The assay results are coming through, and we'll have an upgraded mineral resource estimate out in the middle of September. But basically, it'll give us 15 to 20 years mine life to start off with, which is plenty, as you know, for financing. And we will produce around 16,000 tons of mixed rare earth carbonate, which, sorry to bombard you with numbers, will represent about 3,500 tons of NdPr oxide. And that will make us one of the major producers in the world. So just give you a comparison, Lynas Corporation, which has a market cap of $1 billion US, produces around 5,500 tons of NdPr oxide. We're slightly smaller than that, sort of 3,500 tons in a mixed rare earth carbonate. Interestingly, an American company, MP Minerals, the old Mountain Pass mine, which I know you're familiar with, is just reversed itself into a SPAC in New York, and they're coming to market with a valuation of $1.5 billion, and they're producing a little bit more than, they're producing around 6,000 tons of NdPr oxide. So in other words, you know, Lynas and MP are setting the benchmark for the valuations at, you know, there's 6,000, 5,000 tons of NdPr contained. We think we're the next cab off the rank. We've got a market cap of 40 million pounds, and yet we're coming with a BFS that will show production of around 3,500 tons.
Yep.
So what's exciting is if we get this right, we go from a junior with a market cap of 40 million pounds, say 50 million US, into a valuation range which is going to be in 500 million US to $1 billion. That's the excitement.
It is, but there's a bit more to it than that, right? The economics come into it. The technical ability to extract the rare earths from the mineralogy comes into it, and you've got to do that all economically. So it's nice comparing yourself to those big companies, but they have a different set of problems from you. I'm trying to get at, you know, what do you know about what's in the ground? You've got a pre-feasibility study at the moment, right? So how do you move things forward?
So the pre-feasibility study is 6-8 months old now. So we're halfway to a BFS. We've told everybody the BFS will be out in the middle of October, the revised resource assessment at the end of September. So I can't quote you any numbers in that future study, but I can tell you that the things we have announced are we've got a very high-grade NdPr contained ore body, deeply weathered, sitting on the surface. The PFS showed that we could float that into a concentrate relatively straightforwardly. What we've subsequently come out and said, rather than produce a concentrate, we're going to add on another bit of circuit, and we're going to produce a mixed rare earth carbonate. So the capital cost has increased from around $130 million to around $200 million. The operating costs around that, well, obviously it's nothing we can discuss at this point because it's going to be in the study. But if you look at Hastings Metals Tech as an ASX listing company, some of these numbers I'm throwing around with you now we've got lower capex than them. We think our operating costs will be lower, but that's the sort of scale of project you're looking at. The difference is between us and all the other competitors is we have this huge advantage is that instead of costing $500 million or more, we're $200 million, and we have we're permitted. We have a presidential approval for our mining license, and we have our, as we just released, our heads of agreement with the China Great Wall, and we have sovereign wealth and backing. So your question to every rare earth junior is, that's great, you've got a great project, all the rest of it. Show me the finance, show me the permitting. Well, I'm showing you both for ours, and that's why we think we'll be first to market in terms of getting the next major rare earth mine into production.
Okay. I do ask for those things, and I do try and understand the economics. So, but what interests me about what you just said is you've moved further downstream. CapEx has obviously gone up, another 50%, but it's fine. It's 200 million CapEx, no big deal. What was the consideration? What was the thought process to move downstream? Could you have moved further downstream? What were the? I
think everybody does. It's interesting. It's a good question. I mean, it's the key question. Why not stick at $135 million and sell your concentrate like Mountain Pass is at somewhere between $1,600 a ton and $2,000 a ton? That's a business. The difference is if you're selling a concentrate, you've only got a few customers. If you're selling a carbonate, you've got a wide range of customers. You've got a lot of magnet producers in China. You've got the Japanese, the Koreans, and the Germans. So it's essentially a bigger market, and you're not dependent on on one or two customers. And the second reason is the value add's quite good. You put this extra capital in, extra operating costs, and instead of getting $1,500 to $2,000 a ton per ton of concentrate, you get somewhere. Well, they're currently trading around $2,000 to $3,000 a ton, but that's for 41% mixed rare earth carbonate. We'd be looking to produce a 75-80%, so twice that. So you're looking sort of, Hastings are talking about $8,000 a ton. So you're looking in that $6,000 to $8,000 a ton revenue range compared to $1,500 to $2,000. So you can quickly see that we're trebling or quadrupling the revenue stream for as you pointed out, only a 50% increase in capital cost. And obviously we haven't revealed the operating costs yet. We're still working through that, but it won't be a trebling of the operating costs. So you can see the EBITDA margin should be much, much bigger, and the markets are much bigger. And it's interesting, all rare earth companies seem to make this journey. Mountain Pass are just exactly that same thing. And they started off selling this concentrate to China, and now they're going the whole separation process, and they're now even talking about, in their latest version, going all the way through to magnets. And I think that what it is, Matt, is you go each step you go down the rare earth chain, you capture more value, and it's complex and difficult, but if you solve it, it's a very, very good return on the extra capital employed.
No, I understand that, but why stop here? I'm just trying to understand the conversation that was going on at board level, saying, okay, we're just going to move it slightly further downstream, and that's enough. That's enough value for us. You're a company that talks big.
It's a really good question, and the answer is the step we're taking is with a relatively straightforward rotating kiln. We're putting a concentrate in it. We're going to bake it. We make it water soluble. We're going to extract out of that pull out the uranium, the thorium, and produce a high grade mixed rare earth carbonate and sell that to the next step. And the next step is quite complicated. It's called separation. And that process is one I think is a step too far for us as a junior company. The rotating kiln is just a kiln that's no different to the ones they have in the mineral sands industry. Most mining companies are comfortable with that. But the moment you go to the next step, you need specialized bucket chemistry style rare earth processing capabilities. We don't have that, and we don't profess to have it. Others do. So we're happy to be a supplier to those that have it. We think this is the limit of our journey downstream. It's the limit of our value-adding journey.
Okay. I used a phrase earlier, window dressing. And do you understand what I mean by that? Because the market is valuing it at $40 million, which is nothing compared to the story you're telling, right? So what is it you think the market is wanting to hear from you? Does it need more substance in terms of what's under the ground? Do you think they're going to have to wait until the bankable feasibility study to see that? Or do you just think no one really isn't that interested in rare earths?
Well, I think they are interested in rare earths. To take the last part first, the stock's trebled 300%. We're one of the best performing post-COVID stocks. We've now completely washed out the day traders from Australia. We've got 50 holders now who own 78% of the stock. As we indicated in the presentation, those insiders are buying more. So the people who are buying the stock are the existing holders buying more. So that's a very good sign. So you often ask people on your show, who's going to buy your stock? Well, I can tell you, people like me, the existing owners of this company are buying more. The bit where I think it captures people's imagination is we do need that third-party validation of everything I'm telling you, and that comes out in the bankable feasibility study. And if the bankable feasibility comes out and says, here's a set of numbers, here's the new resource estimate, here's the marketing studies, and here's a report from Roskills that says this is our future view on the future carbonate prices, then investors can look at that and say, wow, I can now get my head around these numbers. They've got third-party validation. They've got very strong shareholders buying more. I can now take a reasonable investment step. So the moment there's risk between now and then, we don't have that study. So people are buying the stock now, are looking at the existing information, and projecting where we are now into a position in the future. The BFS, as you know, is an economic study. Will come out and say this is what the economics look like, and it's third-party validated. So I think that's the big milestone.
But it's you've trebled, which is great, but it's from a low base to a low base. I'm trying to get at, what do you think the market needs to hear? Because rare earth companies, I think there's some great rare earth companies out there, and there's, look at all the macro numbers. It's fantastic, right? People should be excited about the deficit, the macro story, the supply-demand story. But you're still a small company. So again, it comes back to the question, the BFS will say so much, right? But what is it that you think the market as a whole needs to understand about rare earths before they start actually putting their money where their mouth is?
It's a really good question. I think it's the dilemma for all unloved companies who are out there who aren't in the gold sector. And gold companies get a free kick at the moment. They just have to mention the word gold and away they go. So we have to do a little bit of education in the market and bring people to up to speed. I mean, one area that I don't think people fully appreciate is, this offshore wind turbine thing. The North Sea offshore wind power hub is the biggest energy installation on the planet. It's 6 times bigger than China's Three Gorges Dam. And on its own, it's going to drive demand for rare earths by 1,500%. We'll need 5 new rare earth mines just to power that. So when people can relate it to something they're familiar with, then I think they can see it. But I think the real driver will be, and it's always the same, you know this better than anybody else, is when the neodymium and praseodymium metal prices start to run, we will run as well. And then if you look at it I watch it on a daily basis, it's getting quite interesting because it's starting to run. There's this, everything we're talking about now translates into people needing to buy more of that metal. So that metal price starts to run. That is the ultimate third-party validation of what we're talking about. And people buy the stock. And the reason why you buy gold stocks and not gold is because the stocks run harder than the underlying metal. So you get leverage on the underlying metal. So people go, okay, I can see these rare earth metal prices are going to run. Which London's main board listed stock have I can own easily to get myself leverage to this stuff, because I know it's going to take off. So I think, in answer to your question, is get the BFS, get an audience, get people aware of who we are and what we do, and then the insiders will keep buying more and more and more, and then one day people will work out that, wow, there really is a shortage in these metals. Metal starts to run, our stock will take off.
It's an interesting point there, because I think traditionally, we've funded rare earths companies in the past, but we were always very nervous about doing it because the erratic nature of the price. It would be shoot up, you get a good year, maybe a good 2 years if you're lucky, and shoot straight back down again. There was no consistency to it. Do you believe going forward that these supply-demand charts are going to create a much more stable environment for rare earths going forward?
Well, the previous run, as you know, was caused by a trade dispute between Japan and China. And basically there was a shipping incident, and the Chinese threatened, they didn't do it, threatened to switch off the tap for rare earths. The rare earth prices went through the roof. This is more fundamental. We're talking about a fundamental shortage, a structural shortage. In fact, there's a guy from Adamus Intelligence who follows it very closely. He issues a warning. He says it's a warning. There is going to be a shortage. So we talk to the auto manufacturers. And I think you'll see, exactly as you've seen in cobalt, not lithium, cobalt, I think you'll see magnet metals as people start to look at the provenance of the metal supply chain for EVs, and certainly wind turbines. I think you're going to see some of these big OEMs starting to move into this space to be absolutely sure. So people talk about the China thing. I don't think it's the China thing. I think it's a supply thing, a supply provenance thing. And I'm aware that people are already looking at this space right now. There is no substitute for permanent magnets for offshore wind turbines. You can't put an induction motor up there and a gearbox. It doesn't work. You need 7 tons of permanent magnets. So if you're going to put 1,000 square kilometers of these wind turbines up there, you got to be sure you are able to get the metal for those magnets. So those conversations are starting to be had now. And in fact, the European Union is actually ahead of the curve on this. They've actually flagged critical raw materials and saying, hey guys, if we're going to meet our sustainability targets, we're going to meet our 2030, 2050, we're going to meet everything we're talking about under the Green New Deal, we better start having a look at the metals to get us there, because they're on the critical list. So those conversations are starting to be had.
Okay, so those on the macro side of things for you and everyone else in this space, there's a lot of conversation going on. Can I ask you one last question, if I may, Paul? With regards to the BFS, who's putting that together and what makes them qualified? Have they worked in the rare earth space, or are these just generalists?
Wood Group, the team from Wood Group, claim, and they will argue it with you, that they are the world's leaders in rare earth processing. So the team, the metallurgists, the engineers, they will argue that they are right up there amongst the very, very best. So we're assembling the best credentialed metallurgists. It's led by Dave Hammond, our geologist, ex-Peak Resources. So it's a world-class team with world-class geologists, mining engineers, process engineers, and I don't think there will be any shadow of a doubt it will be a very, very high-quality document.
Okay, well, I guess we'll have to look up the team and check their background out. And so actually, I just spotted another one, which I meant to ask you. You use wonderful language in your press releases. You say that you will use up to 85% debt package when you get there. So up to, as if that's in your control. Do you feel it is in your control?
We're trying to. The reason for that wording was the SOE funding is typically 85%, and it does have a tenor of 8 to 10 years, and it does have that Sinosure guarantee. So we just said, rather than put an absolute number in there because we don't know where we'll end up, we believe it will be operated. What we're trying to flag for people is it's not private equity style finance, it's not project finance, it is Chinese commercial SOE style funding that is what we're looking at.
So you're going to have to fund at least 30 million yourself, is that right?
Yes, and I think there's a.
What's your market cap?
40 million,
right.
40 million pounds. Yeah, but you talk as if that's an impediment. It's actually weird, slightly the other way. Smaller companies have difficulty bringing in big institutions because there's no capacity. If I went around town tomorrow and said I need 30 million, it's relatively straightforward. So the issue for us is to make sure the share price is orders of magnitude higher than it is now, so existing shareholders get rewarded along the way. And you know, to give you a sense of it, Matt, and I know you're familiar with the sector, it's a bit like everything to do with rare earths is the opposite of gold. You know, if you go into a room of 100 investors, 99 of them are like gold, one won't. Well, it's the opposite for rare earths. You know, there's 99 people in the room. There's only one that likes rare earths. And you're practically the only person who'll talk to me, Matt. But often, as you know, that one person who backs you, almost the contrarian, they're the ones who make the multiple return. So we're saying to people, yeah, it's not on your radar screen right now, but have a look at the macro trends. Show me how many mines are in construction around the world. Look at the valuation that MP materials are getting in New York. These are big, big numbers. They're much better than the gold sector, and much better returns than the gold sector. But you know, you've got to be that 1 in 100 who wants to make that bet. That's currently where we sit.
Okay.
So we appreciate your comments. But it will change. And then, as I say, as the metal price starts to take off, more and more people start to look at it, and then it becomes more acceptable to invest.
I agree with everything you've just said. I think with 85% debt funding, it becomes an easier conversation than if it was 60, 40, 70, 30 debt for sure. So I think that is in your favor. I'm intrigued by what the cost of that money is going to be to you and your shareholders. And, you know, I guess as you move towards the point where you're starting to have those conversations, you'll let us know.
We will very much look at. Well, I think you'll have to admit that we've done rather well with our funding to date. You know, we're working very closely with the Angolan Sovereign Wealth Fund, which has been every issue we've done has been at a premium to the one before. So we've added value to existing shareholders. We've gone out, brought on this demonstrably. We've demonstrated how we're going to do the main funding. And as you're flagging, we've got a funding gap of around 30 to 50 million US. Well, I think given our track record, you have to say we can safely put that away at a very good cost. And we're very focused on share price and existing shareholder returns. Just one final thing is, there's I know you're a student of economics, but everyone talks about Buffett and there's a guy called Singleton, and he ran one of the most successful American corporations for about 30 years, and he did it by treasuring his equity. He treasured every single share, and he never issued shares unless the share price was very, very high. And when he had the opportunities, he bought back his existing shares. So we're saying to you, we've done a share consolidation. We are very miserly in terms of how we issue our shares in the company, and everything we do is focused on generating a return on a per share basis. So we hope to come back to you with a significantly higher price than it is today, and continue to demonstrate that philosophy.
Good man, Paul. Great story. Well done moving things forward. Genuinely, pick up that phone. Let us know, when things are starting to move at pace. When's the delivery of the BFS?
We've got the mineral resource estimate in September, which is a big milestone, and then the BFS is the middle of October.
Great.
So
Good.
Maybe we do both of those and give you progress. And you should buy some shares now, and then you can see how much money I'm going to make you along the way.